Hello, folks. Wendy's doing the jig over here.
Tap dancing.
That's the soft shoe. For those of you that are about half our age, that's a dance.
It wasn't an epileptic seizure, we promise. She's okay.
That looks different.
All right. So, thanks for joining us on the Passive Wealth Show. If you ever had a portfolio of rental properties and you're wondering how to continue to get more and take advantage of lower rates, as well as the question comes up a lot about protecting your assets and having a little bit of anonymity. We're going to cover that a little more right after this. They just continue to impress, don't they?
Super cool.
I feel badly that I didn't wear my R2D2 t-shirt that has his hand up in the middle and he's saying R2FU. I can only wear that to selected areas.
That's right. That's right.
So my name is, I'm not going to say that yet. This is Wendy Sweet and Jonathan Davis, and I'm the special guest, Bill Fairman.
He is special.
That's very true. You are very special.
We are Carolina Capital Management.
Special ed.
We are
Keep going.
we are lenders in the Southeast. I did travel on the little bus.
Yeah. You drove it too.
Yes, I did that as well. Anyway, if you're interested in borrowing money in the Southeast, go to our website, carolinahardmoney.com. Click on the Apply Now button. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, follow us.
Like us.
Please, somebody like me.
Yeah. Hit the bell.
They like
all
me.
that good
They
stuff.
really like me.
You and Sally Field.
I want to go ahead and, thank you for reminding me with those fancy graphics. We do have a question or a comment section, either to the right or to the bottom of your screen, depending on the platform that you're viewing us from. So if you have any questions, comments, keep them to yourself or put them in the screen. So
Or keep the show.
we had a guest, and
Now we don't.
Unfortunately, it's me. But
We had a last minute change of plans.
And this is why we love the industry that we're in, by the way.
That's why I like to tap dance. We're going to
Because
figure out something else to do.
We have always learned how to turn the ship in a shorter space, right?
That's right.
So, all right. I did have a question from somebody that was following us on Facebook. I am not going to mention his or her name because they didn't give me permission to, but they had an interesting question about owning a large portfolio of single family properties. And basically what they're looking to do is refinance into a corporate name or a company name, number one, so they could continue to get mortgages through Fannie Freddie.
So currently,
And-
he or she has all of these properties in their individual name. Is that what
Correct.
you're saying?
Yes, I would get to that. So this person has a $2 million portfolio, all held in personal name. Couple of reasons for the refinance is because when you're doing Fannie Freddie loans on most of these, you have debt to income ratios you have to deal with.
Well, you're limited to 10 per
And you're limited to 10 properties financed,
spouse.
as well as asset protection. So, I mean, that's a lot to cover. And there's a lot of different avenues to take on this as well. Asset protection. You're going to get a certain amount, and I'll do that part, and you guys can handle the loan part.
Thank you.
Thank you. You're welcome.
Appreciate it, Bill.
Asset protection. You're going to get a bit of asset protection when you put properties in a company name. Here's where you run into problems: is you don't really have anonymity because
Is that a sea creature?
is that a relative? Anonymity.
Don't hurt yourself.
So when it's in a corporate name, anybody can look up the corporation and see who owns the corporation.
Mhm.
So that you don't have anonymity.
Right.
But you do have
Protection.
some sort of legal protection, unless, of course, you do something that is willful. or neglect.
Or commingle your funds and showing that you didn't stick with your LLC or entity and you did personal stuff in your bank account too. That can kind of mess you up because then they can pierce it and say, hey.
Yeah. Well, essentially, what you need to do, and Walter Walford was the prime example of this. I think he had like 25 properties in a single LLC,
Mm-hmm.
and he got a lawsuit against him for a dog bite
On one of the properties.
on one of the properties. And he
Mhm.
said, I'm not going to worry about this. I didn't even own the property when it happened.
Right.
So how can I be responsible? And this was in Jackson, Mississippi. Nothing against Jackson, Mississippi, but there's a reason that class action lawsuits were filed in Mississippi prior to this. They had no tort reform, and they didn't have a very bright jury pool because he ended up losing the case.
Are you calling all people in Jackson not too bright?
No, just the people that aren't smart enough to get out of jury duty.
Yeah.
Anyway,
Please don't email us about his comments.
cards and letters to me only. So anyway, long story short, he says never put anything more than one property into a single entity,
Which is tough.
and he wants to.
And that was
and I
because
agree with this.
he only locks up that one property.
right.
He doesn't lock up all
That's
of
right.
them.
And the problem with this was he had 25 properties. He had $50,000 lien against it, judgment that he was still appealing.
Mhm.
And none of the properties in that portfolio were worth $50,000 individually. So it tied up every single property
Yeah.
that he owned.
Yeah.
And he couldn't move them, couldn't do anything with them other than just continue to rent.
Mhm.
So to
He-
avoid that,
Couldn't he sell like 3 of them off at one time?
he would have had to pay the judgment. And
Yeah,
he
that's-
was appealing the judgment.
Yeah.
Yeah.
Yeah. But even if you had one property, it would still lock that up.
Well,
I guess did he want to sell any of the properties?
that's beside the point.
No, he didn't.
I can't
Well-
read his mind.
Well, I'm just saying, like, then what's the point?
Well, the point is that if you have, a bunch of properties under one single entity and one
all
lawsuit
of them can
will
be
tie them
affected.
all up. So if you keep them separate, they can only tie up the one that the property is in.
Sure.
The rest of them you're free to do anything you want to with them.
Okay.
One won't affect the other.
I understand that, but I guess if you're not, if they're all rentals and you don't want to sell them, then why would you?
Well, first
and
of all,
then-
you never know what's going
I
to
can
happen.
tell you the details on that.
But-
He seller finances everything. So when
Ah.
one person would get to a point where they've paid for
And they
their,
wanted to transfer the property, then he couldn't
do it.
Okay.
So it
Now, okay.
affected everybody that was
Well,
in
that
there.
said, even if that wasn't the case, and he never wanted to sell any of them, you never know what the market conditions can change, and you need to have your plan B and C, and
No.
that deprives you from your plan B and C.
Sure.
If it locks you
You can,
into
yeah.
this is
So
all
what
you
many
can do.
attorneys will tell you is instead of just putting one in its own little entity, that if you've got 20 properties, break them up into 3s and 4s.
Mhm.
And because otherwise you're doing taxes.
The other
on-
way is to do a land trust and
Hmm.
make sure that the trustee in the land trust is in a separate state from the property.
Yeah.
Because
But it's not
what happened,
completely
this
secure.
is for anonymity purposes, and anybody with enough willpower can break that veil. But
Mhm.
here's what typically happens. It keeps you from having the ambulance chasing attorneys get involved because it's just too much work.
Yeah.
And
So you're talking about being sued?
Yeah.
slip and fall, whatever. And
Well,
somebody
wouldn't
looks,
the best insulation for being sued, it would be having 20 to 30 properties in one LLC and having a blanket loan on them, so that one property, if you pick that out, it would look like there's $2 million of debt on that property. We can't sue you. There's no equity there.
That's another one. Or you could have an umbrella policy
Well,
on everything to
but-
protect you.
No.
Here's the thing. An attorney might look at this and say, oh, he's got 20 properties.
Let's go for the gold.
He's got money somewhere.
Sure.
So then they
They don't
see
know a lot about
if they
landlords,
think
do they?
you only have 1 or 2 properties, they probably let you go. And if they don't know how many properties you have, because they're all in land trusts, and all they know is the trustee. They don't know who the landowner is. They would have to pay another attorney in the state that the trustee is in to even talk to that person. So it's just too much trouble, and they move on. Either way, if they move on before they start the process, you're saving a lot of money. If they start the process, now you got to hire somebody to defend you. And now you're talking about a cost involved. There is no way that, and let me finish this real quick. There is no way that you have a veil that you can't penetrate.
That's right.
It's just one's going to be harder to penetrate to the other. Let's talk about the mortgage.
Well, I'm not sure his whole point for transferring the properties was for protection either. He was trying to get
No, it was
more
several things.
FA
And I will tell you that the goal is personal DTI.
debt to income
So
ratio.
I can get more mortgages and asset protection / anonymity.
Right.
So it's all the above.
So it's to get more mortgages. That's great and wonderful. First of all, a guy that owns 20 properties and that can qualify FHA for more, he's or conventional. He's strong. Fannie Mae is what I meant to say. Sorry. He's a strong guy. He's got, good income. He's a strong guy to be able to do that, or girl, to be able to do that. The thing is now Fannie Mae is putting the timeout on.
Oh, the 7% cap.
Yeah. On doing second homes and
investor loans.
Yeah,
investor. Yeah. I mean, to clear out, to free up. There's so many different schools of thought. I mean, you could throw them all into like we talked about, a portfolio package on a portfolio loan. If someone, tries to sue you, they're going to see that each property has a massive amount of debt on it. Now, if they dig deeper, they can find out, oh, you actually own all these properties. So that may not be as helpful.
Even his interest rates are going to be, 4, 5, 6%. Talk a little bit about the new program we have now for long term.
Yeah, our rates start at 4 1/4.
Mm-hmm.
So
amazing.
Yeah, so
it's true. It's true.
Yeah,
you got to have a 900 credit score.
Yeah. That's not true.
And 50% down.
That's it.
Yeah. No, I don't know. Yeah, but
again, not true.
Not true. But yeah, start there. And it goes up. I mean,
760, I think, is where you get the best break.
Yes.
Right?
Yeah. If you have over a 760, I mean, you're gonna just get phenomenal deals. But our minimum credit score, it's gonna be right at 680. There's exceptions for a little below that, and we will do minimum $100,000 loan. There's exceptions down to 60,000, depending on the area, because not all areas are the same.
That's
and we
right.
actually understand that. So
but you can do portfolio loans.
yeah, you can do portfolio loans, single assets. There's 5-1, 7-1, 10-1.
What that means is a 5-1 arm, a 7-1 arm, which means
it's an adjustable rate after a 5-year term, or 7-year or 10-year. And then there's also a 30-year fixed
and
program.
there's prepay on that too.
Yeah, so most of them will have 3-2-1, and some will have a 5-4-3-2-1. So,
which means you'll have 5 years of a prepay, because we got to make sure there's people that don't understand financing on here.
Yeah. So our deal is so good that we want you to stay in it for 5 years.
That's right. And actually, when you're going back to Fannie Mae to get these loans, those are the rates you're going to be paying now, because in order for them to take their portfolio from 15% down to the 7% that they're trying to get to, they're having to raise the rates, right?
Yeah, they're up. They're what, above 4.5 right now.
Mm-hmm.
My wife worked for a very large banking firm. I'm not going to mention
That starts
their name.
with B and ends with A. It has an of there in the middle.
And one of the techniques they used when they got too much business was to raise their rates.
Mm-hmm.
And what I would make me laugh is that people would still get their loans. So even though their rates were higher than everybody
Yeah,
else.
Yeah.
But that was a way to slow down production when it got too busy for them. They would just continue to raise their rates until they said, I'm going somewhere else.
Yeah. So that's
Yeah.
what Fannie Mae's
But
doing. With
one
the
of the things
investor
I want to
loans.
caution people on, if they're thinking about doing portfolio loans, there's nothing wrong with them. It solves a lot of problems,
Mhm.
but it also adds a layer that could be an issue. And that's if you're monitoring your portfolio and you want to sell properties off as you get too much equity in them, and you don't want to have lazy money in there, and maybe you want to sell a couple and buy somewhere else.
Mhm.
Sure.
Getting those carve outs for the properties that are all under one loan.
Yeah. It's
Well,
called a
Some
release.
lenders,
Yeah.
and you have to look at the paperwork. Some lenders may want 125% of the loan. So
115
And
to
this
120
one,
is
yeah.
pretty standard.
Yeah.
Yeah.
it may not benefit you to sell that property
Right.
and get that equity. So you
And,
have to look.
and why do they want that? If you sell a property, typically you're going to sell the property that's most desirable.
Yeah.
That's why it has the most equity.
That's why it has the most equity. It's the most desirable one. So the lender says, okay, if you're going to sell the most desirable one, the ones that are left are less desirable than that one. So we want to have a lower loan to value ratio on the one that are left in.
Right.
So if you sell the best property and we were at 80% LTV, then when you do sell that, we want to be at 77, 78% LTV. We want to just keep lowering that down.
So
And
they're
it
not
may-
going to give you as much credit on that payoff.
Well, they may have looked at a blended loan to value in that portfolio. So you have some at 80, some at 75, some at 65, some at 50, and they're happy with the blended. And then you sell the ones that have the lower amount. Now their LTV has gone up quite a bit.
Exactly.
So it's more risk to them if they have to take it back.
Right.
Yeah, exactly. Because the principal that gets allocated from the loan amount to each property is different based on the property's value. So,
But there's value in doing it both ways. You just have to, kind of juggle and understand that there are things you have to think about with exit strategies.
Right.
and then the other piece of it is, like blanket loans make it much easier to do your taxes.
Yeah.
Mhm.
When you have 30 different LLCs
Yeah.
for each asset,
Oh, yeah.
it gets a little complicated.
Yeah.
This is why in the earlier show, when we were discussing multifamily, it's a whole lot easier to have a lot of stuff under one roof, a lot of doors under one roof,
Yeah.
than it is to have a spread out portfolio.
That's right.
However, when it comes down to it, the single family homes are the most liquid,
Hmm.
and
That's true.
those are the safest.
Yeah. For sure.
So
There's benefits and
I hope we didn't confuse you.
yeah.
We're just
Yeah,
trying
but
to,
that's clear as mud.
They're only as confused as we are.
Yeah.
we just want you to go into these things eyes wide open and look at all the angles and
Yeah.
make sure that you have the exit strategies that you desire.
And the right
Because
questions to ask.
number one is bankers were always looking at worst case scenario.
Mhm.
Yeah.
By the way, don't forget about Wednesday with Wendy. The link is right there in the chat box. Isn't that
That's
sweet?
fancy. That's fancy.
Now, I
Fancy
was told by
fancy.
Scott, pause when you say Wednesday with Wendy.
And you
I-
didn't.
did I? No,
No.
I don't know how to pause. I
He
just
doesn't
continue to
know.
talk.
Keep trying to hit the button, but
Yeah. So maybe my batteries will run down. Anyway, it was a awfully wonderful show.
yes, it was.
We are Carolina
One that we
Capital
did
Management. We are lenders in the Southeast. Stop dancing. If you are a borrower and you're interested in borrowing money in the Southeast, please go to carolinahardmoney.com. Click on the Apply Now tab. If you're a passive investor and you're looking for passive returns, click on the Accredited Investor tab. Don't forget to like. Oh, damn. Not the graphic I'm supposed to
Only at
pause
the
for.
beginning. Only at the beginning.
Share, like, subscribe, hit the bell, all that good stuff. And I'm taking my damn back.
Yeah. It's a bad word.
You guys have a wonderful week. Thank you for joining us on the Passive Wealth Show.
See you next week.